Coming to you live from the palatial studios of PBJ Productions. Welcome to Patrick and BJ Talk Real Estate, where we talk about life, the universe, and everything as it relates to real estate. Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. And you know what? Today, I am wearing sunglasses because the future is so bright. Remember that song? Maybe you don't, but there's a song, "The Future is so bright, I have to wear shades." Because the government is going to save us, and the budget has been announced, and everything is going to be wonderful now.
I can only think about the Corey Hart song. I wear
Or
my
sunglasses at night.
All right. So I can... okay, I'll stop now because... No, I don't know the whole song. The federal government announces in their federal budget, our benevolent government.
Right?
Yeah.
So here's one thing about the budget. We're going to talk about a few points on it with capital gains and things like that. But the one thing to preface all of that in the budget is the government said that they would not increase the deficit, but they would increase spending.
How does that work?
Well, I think you're going to have one of the points of how that's going to work here right away.
Well, we want to talk about the capital gains portion in the budget.
There we go.
But it's funny because we're going to apply it to real estate, not corporate. Well, we might talk about corporations and assets and such. But it's funny, we have all these incentives to build rental housing, and then we're going to tax the living beep out of you if you sell it. Right. That's like, we're going to increase it now, right?
Yeah.
So the highlight that we're going to cover in this episode is the increase in capital gains for capital, but how it affects real estate investors. Now, right now, until June 25th, if you sold your place before that and you had capital gains to declare, it would be, you're only taxed on 50% of your gains.
Right.
So they are going to increase it to 66% of your gains. So from half of your gains to 2/3 of your gains.
Yeah. And obviously this is part of the process of generating income for the government. So to keep the deficit the same with increased spending. There's others, but this is just part of it.
This is just one aspect of it.
So, hang on. Let me take these off because maybe the future's not as bright as we thought here. Okay.
Right. So in the short term, this is where it's like, the housing market, we're going to flood the housing. Landlords are going to get out of the rental business. Right? Because they want to avoid the increased capital gains tax before June 25th of this year.
Right.
So in the short term, maybe somebody who's already planned on exiting the landlording business and maybe retiring, or maybe not having it anymore in their portfolio. They're sick and tired of tenants, and the laws are very weighted towards tenants. And I'm not saying that in a bad way. I think tenants do need protection from scrupulous landlords. Unscrupulous landlords. Thank you. And then, but the majority, I don't think, is like that.
Sure. Yeah.
So this might force people who are already thinking about it, or they've sold their properties, they have a deal, to maybe change the closing date to June 24th, let's say, just to avoid that extra 16% that would be affected there. So that's the short-term effect. The long-term effect, if you had rental property right now, I don't have rental property right now, I sold it a while ago, it would make me think twice about selling it.
Yeah, just hold forever.
So I'm curious if we might have an increase in short-term supply, and then after this year, we might see those people holding on to their rental properties longer, reducing market supply. So, will this encourage more hoarding?
Well, the thing that comes to mind for me is if you sell your company, you're still going to pay capital gains on your company.
Very good. So there's companies that are in the real estate business, right?
Yeah.
They have apartment buildings, those kind of things. Well, this would either, I think, again, if you're on the cusp of retirement or you're on the cusp of getting rid of your business, like you've already made the decision, you're just going to come out with less, maybe. I think people will still go ahead and sell those companies, properties, those kinds of things. But what does it say? How does that encourage new investors, new entrepreneurs to enter in the business with the intention of, like, when you start a business, I think, maybe not everybody, I think of it this way. Well, if I start a business doing one thing, what is my exit plan?
Yeah.
Before
Sure.
I even get started, before I even buy a rental property, before I even buy a house,
Yeah.
what is my exit plan?
Yeah.
What does my future look like? Even, it doesn't have to be set in stone, but just have an idea and be aware of what does it look like.
Yeah.
Right? So corporations, how's that going to encourage more people to invest into Canada?
I don't think it is.
You mean the ones that
I should
employ
quali-
lots of people?
Yeah, I should qualify. On a long-term basis, I don't, if they're looking ahead far enough, they're still going to say, okay, because I'm going to figure out a way to live a good life in the interim,
Yes.
right?
Well, that
Or I'm going to max out the debt on the company and take that as my money.
they can find another accounting way to sort of circumvent this tax.
Sure.
Okay. Well, this brings me to some history.
Okay.
I don't have the exact dates because I don't remember what was going on. In the 1990s, capital gains inclusion rate increased from 50% to 66%. Is this going to be deja vu?
Wow.
Later on, they increased it to 75% for a bit.
Wow.
Was there a recession during that time?
The 90s?
Yeah.
I was in Alberta. We were cooking.
We were in Ontario. I just remember we got GST and we got the loonie and we had Brian Mulroney.
That was the 80s.
Was that the 80s?
Yeah.
I thought that was the 90s.
No, Chrétien was the 90s.
Chrétien was the 90s?
Yeah.
Oh boy. What happened after Chrétien?
Paul, didn't he come after his? That
Paul
was
Thornton?
Chrétien's finance minister. Paul, his name escapes me now.
I don't remember. But the point was,
I can tell
we
you
did
that-
see this in the past.
Yeah, I can tell you who the premier of Alberta was at the time.
My point is, we did see this increase in capital gains in the past. So do we, like, as investors, business owners, just hold out?
If you can, sure, why not?
Yeah, obviously there's the timing in people's lives. You know, it might just be like, no, you know what, I'm going to cash out anyways. I get what I get, and I don't get upset.
If you were going to be out, if you're going to be out in the next 6 months, I would be like, why aren't you that would be motivation to get out right now,
Yes, absolutely.
right? But if you're not, then there's no reason to.
Yeah, if you're 5-10 years away, like,
Yeah.
I don't think that would, like, move up your timeline at all.
No.
So anyways, I think this, like, overall, this will just exacerbate the issue of having less inventory on the market. Mm-hmm. Unless interest rates have an issue or have an effect on rental properties where they're holding those properties underwater.
Yeah.
Holding those properties? Those properties are underwater.
Yeah.
Yeah.
Yeah, for sure.
That's it.
Yeah. Okay, well, that's it for today. Thank you for joining us. If you haven't, please take a minute and subscribe to the channel. If you have anything specific you want to talk about capital gains, or maybe your experience with selling a business, buying a business, or even real estate assets, certainly put that in the comments. We love to see that and talk about it with you. And yeah.
If there's something in the budget that you really want to talk about, and we're not going to cover the whole thing because it's sort of
boring.
It's sort of asinine a little bit, right? So if there's something that's really important to you and we find like, oh, that's kind of worth talking about, give us suggestions.
Yeah.
So then we can sort of like clear some of the chaff and get to the interesting stuff, right?
Yeah.
Yeah. All right. Thank you for watching.
Thanks. See ya.